much for being here. We have two superstars in the real estate world. One with an actor name, Jean-Guy. And Patrick, what's Patrick in French?
Patrick.
Patrice.
Oh, Patrick.
And,
well, Patrice is kind of like a girl's name, but we will tell him.
only from your part of Quebec, okay?
Oh, sorry guys, we'll get serious. Rain is a new partner in the Healthy, Wealthy, and Wise coaching program. One of the reasons why is obviously real estate is a big part of creating your overall wealth portfolio. And that's been kind of a gaping hole in our program. As you know, we have the coaching income, we have the stock market when the world's not falling apart. And now we're adding real estate. And just a heads up, if you're in the Healthy, Wealthy, and Wise Platinum Pro program, which we're soft launching next month, you're going to get 80 hours of content to learn more about investing in real estate. But in the meantime, we have a wonderful treat for everybody because we have Patrick and Jean-Guy they're going to be teaching us a lot about real estate today. So I'm going to turn it over to you guys. And thank you very much for doing this today. We really appreciate it.
Yeah, happy to be here.
Thanks so much for having us, Derek. Really appreciate it. I mean, look, I'm renaming my profile to be Jean-Guy, just for you, Derek. So wonderful. Thanks so much for having us, Derek. Really appreciate being here. And given the COVID times, it's time for us to band together as a community. And I'm so excited to be here with Patrick. And Patrick, how are you, my friend?
I'm awesome. I'm so good. It's crazy.
It looks like. Which part of the world are you in? It looks like the sun is rising over there.
It is. Beautiful Fraser Valley of British Columbia. Yes, that's exactly right. And it was just like that at about 6:15 a.m. this morning.
Wonderful. For those that are watching this live, feel free to engage in the chat, folks. We're going to do a Q&A session at the end. So we're going to do lots of questions at the end. We'll stay on as long as we can. Quite often, Patrick, are the last ones to leave, primarily because we like the sound of our own voices. But say hello in the chat. Let us know you found the chat. And for those listening to this recording, it's still going to be ultra valuable to you because we're going to share some real nuggets. So, Patrick, let's start with some introductions because these fine folks don't know who we are. So go ahead.
No. So for those of you who don't know me, my name is Patrick Francoeur. I'm the CEO of the Real Estate Investment Network. I've been part of RAIN. I became a member of the RAIN community back in about 2001, which is about the same time that I started investing in real estate. I've been a small business owner for 35 years, and at that time that I saw real estate as an opportunity, became a member of the community, liked the business so much I bought it back in about 2011. I'm also the host of the Everyday Millionaire podcast, and for those of you who want to learn a lot more about Derek Sweet, if you happen to go to everydaymillionaire.ca, he was my guest. I want to say episode 52 is my recall of that. So you're a fearless leader there. You can hear a little bit more about him. We had a great conversation that day. And so that podcast has been around for 3+ years and got some great guests, some great insights. It's not all about real estate, by the way. It's really about the seemingly ordinary who've achieved some extraordinary results, always some great lessons and some great learning in that. It's a long, kind of usually about an hour 15, an hour 30 in terms of interview style, but they're great. So subscribe if you'd like to learn more about Derek and others. That's me.
Derek, I gotta say, Derek, it's pretty incredible that he remembers episode 52 because most days he doesn't remember my name.
I know.
And in your case, he remembers your name, he remembers the episode, he remembers everything. So.
That's because I like Derek.
It was obviously very impactful. So, hi, folks. My name is JG, or Jean-Guy is the long version in French. The Spanish version for Derek is Juan Guillermo. And the short version is just JG for short. In the last 15 years, I've built and sold 6 different companies. I've been in business, an entrepreneur for 15 years. The first half of my life, I did it without real estate, realized I was making some mistakes, and spent the last half of my career doing business along with real estate. I've written 4 best-selling books. My last book was, and still current, very active book called Messy Manager. It's sold in 14 countries. You can actually get a free copy of that book at messymanager.com if you want. So quick intro on me, and I've also been a REIN member since 2013. My very first decision in real estate was to become a REIN member. My very first decision was that was my first foray into real estate, was to become a member. And I owe a lot of my success in real estate to Patrick Francie, the REIN community as a whole, and everything else that the community has taught me. So thank you to REIN and thank you to the community. And now I'm so blessed that I'd be able to work with Patrick every day as a Chief Growth Officer of REIN. And I'm able to give back. I'm able to educate and help other people figure out what does it take to achieve financial security and financial certainty. And Patrick, that's what we're here for today.
It is. It's all about getting into the basics of what real estate was about. Now, I'll share a quick story about how I got into it as many years ago as I did. Was I'd been a small business owner for a number of years, and I was really modeling myself in terms of who I surrounded myself with, other business owners, and a lot of them very, very successful. And I was blessed to be in those circles. But something I noticed about all of them was that regardless of how successful they were, and many were making multiple millions of dollars, they all had one thing in common. They all owned real estate, investment real estate. And so, at a relatively young age at the time, that seems really young now, at 40 years old or so, 38 years old, I went, geez, if these guys with all their millions that they've made in business still think real estate's a good idea, I should maybe consider that. And that's actually how I got into real estate. Is I just recognized that the people that I admired and wanted to kind of model some of what I did after were real estate investors. And that's where my journey started. It took me a while to get off my ass and get through my own crap, if you will. And so it was about 40 when I started investing in real estate, which is far too late. It's not too late, but it's like, damn it, why didn't I know that at 30? So anyway.
Patrick, I think the question everyone's dying to ask is did you have more hair when you started?
I did, as a matter of fact.
Yeah, nice. Hey, I see Roy Gunderson on the line. That's awesome. Nice to see you, Roy. Yeah, friend of the family there, so that's great. And folks, my story is very similar to Patrick's. I love Derek, what you mentioned at the beginning, because I always knew from a very young age that in order to build incredible wealth, I would have to engage sort of the three pillars of wealth. I'd have to be in business. I'd have to do things like invest in business through stock market, whether through the private markets or through the public markets. And I knew that I had to get the real estate. Now, when it got to I did the first two parts really young. I started my first company when I was 20 years old. I started investing in stocks when I was 21 years old. The real estate part I started when I was about 28 years old. And as Patrick mentioned, the stuff that he had to get over and that I had to get over, there's a lot of stuff in the way of real estate. And actually, we're going to dig into that, folks, in terms of what is that stuff. And the fact that this is such an amazing community of people that are so self-aware. I got to say, Patrick, this crew watching this, whether live or recording, this crew is miles ahead of the average individual looking to do real estate, because they're way more self-aware. And as a result, I think they'll be able to catapult to success much faster. So let's dig in, folks, a little bit. So there's essentially 5 parts of today's event. The first part is we're going to talk about you. The second part is we're going to talk about, where's my clicker? The second part, we're going to talk about some how-to strategies. We're going to dig into, buy and hold and different strategies of real estate. We're going to then talk about research fundamentals. We're going to talk about the community, the culture, the environment that is required for success. And number 5, we're going to talk about million-dollar mistakes to avoid. The thing with real estate is you have to watch what not to do just as much as you have to watch what to do, because mistakes in real estate cost lots of money. And after 28 years of doing this, Patrick, our community's transacted well over 40,000 properties, $5 billion plus of net worth has been created through our memberships. Incredible. 151,000 investors have been through. We know what to do, and we also know what not to do. So I think we're gonna start by talking about you in real estate, folks, because that's the most important thing. And this, Patrick and Derek, this isn't the usual place to start in real estate, is it, Patrick? I mean, usually people dive into spreadsheets and cash flow and analytics and all this other stuff, which that's not where Rain starts. How come with Rain we start with the individual and we start by talking about the real estate success, entrepreneur success cycle? Why is that, Patrick?
Well, there's a couple things that we need to understand, and that is there's a phrase. I like to think I came up with it, but I don't know if I did, because it's really to me it's quite powerful, which is real estate doesn't fail you, you actually fail real estate. And that's built on the fundamental concept that people take on real estate as they take on many things, but they actually don't create an environment. They don't create a context for it in their life. So as long as it's working, it's kind of cool. But at the first, in the first moment of adversity, in the first moment of a challenge, shit hits the fan and their life kind of starts to come apart. And all of a sudden they're going, this real estate's a stupid idea. I should have never got in it. I hate real estate. It's dumb. I'm out. And really, it has nothing to do with that. What it had to do with that you didn't set yourself up to win in what you were taking on. And I'm sure that is the way with even you as coaches. If you don't set and create the environment for yourself to win in the world of coaching and being a world-class coach, guess what? Coaching doesn't fail you, you fail coaching. And you have to take it on, create an environment for yourself, a right community, the right culture, the right environment to succeed. And real estate's exactly the same thing.
Well, and these amazing people watching this, they know this because that's why they're part of this community.
Yes, totally.
So they get it as part of coaching. It's the same with real estate. Now, what we're going to go into next is the part about you in real estate, because to do real estate, and when Patrick says I had to get over my stuff, and I said it took me 8 years to get into real estate, and some of you watching this right now, you've been thinking about real estate for 5, 10, 15, 20, 30 years, and you're just like, my gosh, imagine, and just because this is the depressing part of the video, yes, you missed out on millions of dollars. Yes, you did. So I'm sorry about that. The good news is that you can choose to not miss out on the next wave. That's up to you. But Patrick, let's talk about the real estate investor success cycle, because this is really the mindset part that Rain brings to the community.
It really is. It's a part of the, really the thought process. And many of you have probably seen this or some version of it, but we put it in the context of real estate because it is a success cycle in the world of real estate, where collectively and often what we find ourselves is living in what we would call our comfort zone, where things are pretty safe. We feel like we're in control. Now, that might not be the case for many today. For others, it remains the same. Feel safe, in control, not putting it out there. But it's also a low risk, low reward, and certainly low satisfaction, because we're driven as humans, as you know, to be contribution, to make a difference. And so when we're sitting there, it's like, this isn't very fulfilling. But when we decide we want to get out of the comfort zone, what we ultimately bump into is what we would call our fear zone. Now, in the world of being in the fear zone, of course, that's where we start telling ourselves the story. It's where we get stuck in the need to control, the stories we're telling ourselves, and we have a lot of resistance around what it is that we're wanting to do. We have we live in a world of making excuses, analysis paralysis, indecisive, because we aren't really clear on what it is that we need to do in this world, in this environment. So there's lots of fear in that, low self-confidence. So we recognize these fear zones, and we're often worried about what others will think. If you start, some of you right now may even be going, I'm not telling anybody I'm looking at real estate because they're just going to tell me I'm crazy. So that's all part of the fear zone and the resistance to what could be possible. So you step into the learning zone. Now the learning zone, lots of people live and stay stuck in the learning zone, but beyond that, it's where we're seeking. We're embracing change. We're looking to and wanting to embrace change. We're looking at new things. We're seeking leadership that we align with, where we share common values, and that it feels like that individual is on the same path that we align with. We're creating relationships, developing new skills. We remain open-minded, and we're in motion. We're starting to move forward because we recognize that we're in the fear zone. We're starting to come through it. And part of getting out of a fear zone, by the way, is seeking knowledge, gaining knowledge. And then what we want to ultimately emerge into is the growth zone. Now, when we get into the growth zone, that's where we get to really be creative. That's where we understand our purpose. We're focused on the actions we need to take because we're clear on what the outcome is going to be. We either create or we become a part of a like-minded community. It's essential. We believe it's essential to really, truly succeed in a culture of support. We're creating a culture of support. We're part of a culture of support. It's caring, it's collaborative, it's sharing, it's energetic, it's lots of compassion and understanding. And that is actually setting ourselves into an environment where we get to succeed. Now, when we start to bring all these things together and we're seeking, we're creating, we start to understand what's possible. Because when you're hanging out in a community of like-minded individuals, you start to see what's possible. And when you understand what's possible, you start to see the opportunities that show up because you believe it's possible, because it's proven. You actually see people doing it and you go, well, holy crap, if he can do it, I can do it. So there's opportunities that show up because now a strategy that you didn't even know existed, all of a sudden you learn about it, guess what? An opportunity shows up. Now we talk about this particular cycle. It is the real estate investor cycle, entrepreneur success cycle, because we keep going through it. JG and I joke about it all the time, which is, how many times did you go through it today? And the key here is recognizing that it is a cycle. And every time you go to the next level of something, you go through this cycle and then you go to the next level and guess what? You get to do it all over again. You get to do it all over again. You raised $100,000 for a joint venture in real estate. Then all of a sudden, I got to raise $1 million for this next project. Holy crap. And then all of this cycle starts over again. So every time you take on something new, a bigger project, you grow, you stretch, you're going through this cycle. So we often ask at this point, in all that's going on with COVID, with all that's going on in your world right now, where are you in this cycle? Where do you find yourself? You can put it in the chat if you're up for it, but that's really a question to enter.
The thing that's really important here, folks, is the most important part is not where you're at. That's not the most important part. The most important part is the recognition and the awareness to point out where you're at. And then that's number one, because without the awareness of knowing where you're at, you can't get yourself out of it. So we can't even talking about moving to the next zone until we can identify where we are. So, and you need to get good at identifying this yourself. You need to be surrounded in a community like your current community in order to help you identify these things so that you can, if you can't get yourself out of it, like I'll give you a perfect example. You need friends and coworkers and partners who can get you out of it. And that's what this kind of community is all about. Patrick, you think about you and I mean, we're not stuck in a fear zone for more than a nanosecond. And that's because A, we can get ourselves out of it very quickly. But B, if we can't, we call each other, for example, to get each other out of it, because you can't do anything in the fear zone. You got to get into the growth zone. And that's the biggest part of real estate is there's so many opportunities. I like to say there's a million ways to make millions of dollars, but you can't see those opportunities. And I'll show you today as we go through the various strategies and the tactics, and we dive a little deeper into real estate. Your mindset to how you react to the things I'm telling you is going to indicate what zone you're in. So if I share with you an assignment and I share you a deal structure with you and you think to yourself, well, that's crazy, that wouldn't work for me. Well, you're clearly not in the growth zone if that's how you're thinking. So you can't recognize opportunities until you get into the growth zone. And that means you got to get through this cycle. So we like to start with that. And the funny thing is that we don't always, but we often start with this. But today I feel so good, Patrick, because I feel like this community really gets it. They really understand. It really resonates with them as to they understand how to get themselves out of it. So I'm really excited about that. So that's important. The next part that's important, so that's you in real estate. Very important. Before you focus on real estate, you really got to focus on you. That's the first part. The second part is you have to watch out for the pitfalls of real estate. You have to watch for the $1 million mistakes in real estate, because so many people, and there's people on this line right now that are listening to this, whether live or recording, and are thinking to themselves, I had a good thing going once, but I made a mistake or two and it wiped it all away. And real estate is very much like that. You could do you could do 5, 10, 15 years of amazing things in real estate. It can all be taken away from you if you make a couple mistakes. So we like to identify the $1 million mistakes throughout the presentation so you see them. And also, Patrick, it's important to note that most companies don't share this stuff. That's why I put this slide of the stairs under the water. This is the stuff under the water nobody talks about. Mm-hmm. That's what Rain's known for, is to show you, what's behind the curtain, what's under the water. We like to peel back the onion. So as we go through today, we're going to share with you these $1 million mistakes. And in fact, let's start with the first one, and it's this. Patrick, you're famous. You're Insta famous. For saying that you have to treat your real estate investment like a business. And so many people don't do that. So let's dig into that, Patrick.
Yeah, it was many years ago that Don R. Campbell, when he wrote the book, the original book, Real Estate Investing in Canada, and when I first got to know Don at the time, he would say, people got to treat their real estate investing like a business. And it really occurred to me that as a business owner, that made sense to me. I understood that. As a matter of fact, I was a small business owner. I got it. But, if you're not a small business owner, if you are, a tradesperson, or you're a healthcare worker, or whatever career you might have, a nurse, a doctor, it doesn't matter. What does treating it like a business really mean? Because you're getting a paycheck and you just do what you do and you get paid by the hour. But in the context of real estate, and especially I think in most strategies, the context of treating it like a business can be best summed up in terms of an example. So if I buy a single piece of property, and any property I buy, and every property I buy is like a little business, because I have this thing called an asset. I have an agreement with a bank. I had to go and get a lawyer and probably speak to my accountant. Now I have something to sell, in this case, rent the space. And so I have a client. I have a client who is my tenant. I'm going to market to that tenant, so I have a way of marketing and saying, hey, tenant, come look at my property. It's beautiful. I have maintenance. I have the ongoing operation of my business, whether it be some software or, Facebook ads or whatever that might be. There's an operating cost that's involved in it. And so there's revenue coming in called my rent. And then there's expenses going out called mortgages, taxes, insurance, operating costs. Now, I think you would all agree that starts to sound like a little business, doesn't it? I happen to pay $400,000 or $500,000 for that business. Now what I need to do is churn revenue through it. I need to churn expenses through it. So the more I can understand that it is a little business, the more that I then shift how I operate. And so when you see this pyramid, so when Don used that term, he goes, you make a really good point. Can you figure out a way to kind of make that make sense for people? So part of how I make that make sense is I create a context for it. I built this pyramid around it because within this pyramid is all the building blocks that it takes to operate your real estate and treat it like a business. So we see the cornerstones of education, always ongoing. Community is a big part of it, but as you look at all the building blocks, you see financing and research, economic research. And Derek's a huge research guy, so he gets the importance of that. There's coaching, there's property management, there's delegation team, all of those building blocks, capital and accounting. So all of those building blocks, if you double click on any one of them, they open up into a whole bigger conversation about what it takes. Now, this isn't to overwhelm you with what it takes to invest in a piece of real estate, because it's actually quite simple, and it is actually quite easy when you break it down this way, because then you can identify where the gaps are for you. But when you take that and bring it all together, that is really what sets you up for a financially certain future. And it's going to be driven by your vision, because you're building it on a very strong foundation of understanding what it is you're buying, why you're buying it, what your time, money, knowledge, availability is, and focus. So TMK, JG, let's just spend a minute on time, money, knowledge before we move on from here.
Yep. Well, time, money, knowledge, folks, is really the three resources that every real estate investor has at disposal. Everyone has a different amount of time, a different amount of money, and a different amount of knowledge. And as we go through, and you'll see the next section, we talk about the various strategies. And every strategy has a certain time, money, knowledge ratio that it requires. So for example, as I take you through buy and hold, you're going to see buy and hold doesn't take a lot of time. It takes some time, but not a lot of time. It takes quite a bit of money. It's very high on the money scale. And in terms of knowledge, it does take some knowledge. Then you fast forward to like a fix and flip, for example, that would require, depending on if you're doing it yourself or not, it definitely requires a lot of time. It doesn't require as much money, but it does require a lot of knowledge. So everyone has a different amount of time, money, knowledge, and how you allocate that time, money, knowledge is your job as a real estate investment entrepreneur.
Yeah, and it may not be being in the action of it, because the time, money, knowledge, what we call a time, money, knowledge focus matrix, is when you start to place yourself in that matrix, you start to have clarity about how you take real estate on, because you can still take it on. And I'll use an extreme, let's talk about a professional, like, I don't know, let's say a pilot, a doctor, a dentist, known for being high income, but what do they lack when it comes to real estate? Time.
No time.
They have no time. And quite frankly, they generally have very little knowledge, because it's not their highest and best use of their time in terms of seeking knowledge. They're better to stay focused on what they need to be brilliant at, whether that be a GP or a surgeon or whatever. And so they do have capital, and they do understand that they need to invest that capital and put it to work. And they do understand in general that real estate is the place to do that. So what do? They still want to invest in real estate. How the hell are they going to do that? They got no time and they got no knowledge. Well, then what they do is they seek others who have what? Time and knowledge, maybe some money, maybe no money, maybe a lot of money, but ultimately they need to find somebody with time and knowledge that they can use and work with to invest in real estate. And there's a number of ways to do that. So that's just an example, but that goes back to treating it like a business. So this is all setting your environment up and understanding how to create the environment for you to succeed investing in real estate.
Yeah, the other thing about time, money, knowledge, folks, is it doesn't really matter how much time, money, or knowledge you have, because there's always a strategy available to you, assuming you want to invest in real estate with any combination of time, money, knowledge. So Patrick is often a money partner in a deal. He has very little time. He has a lot of knowledge. He's got capital to invest, but he doesn't want to spend his time in real estate. So, and then you have, on the flip side, you have other people who have no money or low money and little money. They have lots of knowledge and they have time. Perfect match right there. Perfect match made in heaven. So that time, money, knowledge ratio and the matrix, as we call it, is very important. But the main message is it doesn't matter what you have. You can do real estate. You just have to pick the right strategy that matches your time, money, knowledge matrix. So as we dig into that, keep that in mind, because this isn't just about information. If it was only about information, we'd all have six-pack abs and be billionaires. So we know it's not just about information. It's about having the right tools. It's about sharpening your saw at the right time, especially right now, given where we're at in the world, given, this being recorded during COVID-19. It's time to sharpen your saw right now. It's not necessarily time to go out and buy a piece of real estate today, but you should be sharpening your saw today, because there's going to be some amazing opportunities very, very soon. We don't know exactly when. We are on the lookout though, but you have to sharpen your saw right now, Patrick. Now's the time to be sharpening the saw.
This is really the perfect opportunity for preparation, right? And really taking the time it takes, so it takes less time. When these opportunities start to show up, and so for some of you, I'm assuming that I'm not going to make any assumptions. So whether you're a real estate investor now or thinking about it, the reality of it is if you start now, you're getting a running start, so that when the opportunities show up, number one, you'll see opportunities because you have a fundamental understanding of real estate. That's key. Otherwise, you won't see opportunities. And secondly, if it is of interest to you, you don't want to be starting and going, oh, let me chase that. You actually want to be out in front of it. And that's the key in real estate success, is to get out in front of real estate, where real estate is going, not where it's been. This is so critical. When you talk to real estate agents, not making real estate agents wrong whatsoever, they always look at historical data. And that's great, by the way. we're a research company and we want to look into the future. We want to get out to where real estate is going, not where it's been. So when we're doing research, we're always looking at saying, what's the economic fundamentals that are going to drive the market? What regions, why is that region good? Why is that city? Why is that neighborhood? Because we're looking into the future so we can buy and get in front of the wave.
Yeah. So right now, here we are. We are going to give you that tool belt with no tools in it. There's no tools in it. We are giving you this tool belt. Congratulations, you got yourself an empty tool belt. Awesome. Now it's your job as a real estate investor to fill them with tools in order, and then learn how to use those tools at the right time. So that's right now you got an empty tool belt. So the good news is at least you have a tool belt. We have a place to put the tools, and let's start putting some tools in there. One of the other, another common and pretty substantial mistake made is making sure you choose the right tool for the right job. Make sure that you match the right strategy and tactic to your goals. So I'll give you a perfect example. As we go through the following 4 strategies, 2 of them are active income strategies. They put money in your pocket today. They are as good as cash. They put, you could use them to buy a Porsche. You could use that money to take your family on a vacation. You could use that money to invest in the stock market. You use that money to build your coaching business. You could use that money. It's active income. There's 2 of those the other strategies we're going to show you. They're passive income. They are strategies for the future. They are things you're investing in for wealth later and passive income later. Very important, because the big misnomer in real estate that if you do invest in a passive income strategy, if you take that money out of your passive income business, if you take that money out, you're going to end up being in great pain. And probably one of the biggest myths of real estate is when people build up a passive income portfolio and they strip all the money out of it, and then something goes wrong with that portfolio and they lose it all because they never properly capitalize that portfolio. We'll talk about that as we go forward. So number 1, just make that note. Be sure to choose the right tool for the right job. Let's go through the first strategy, Patrick. Number 1, buy and hold. Classic strategy, very classic. Still the cornerstone and the pillar of most people's real estate portfolios, as it should be. This is a passive income strategy. This is a invest now, make money later kind of strategy. So here's an example of what that looks like. So this is all the examples I give you here today, folks, are all deals I've done. They're all deals that have happened in the last year, 2 years. This buy and hold, for example, was about 5-6 years ago. I purchased it for $483,000. We invested $50,000 of cash, $100,000 of appreciation. It appreciated $100,000. It generated $30,000 of net positive cash flow. We paid down the mortgage 50 grand, and that all happened in the first 5 years. Now, I usually ask Derek this question, but I'm going to ask Derek this. I usually ask Patrick this question, but I'm going to ask Derek this question. Derek, that's a 72% ROI. Not a trick question. Is that good?
Very good.
Very good. Absolutely. It's a great ROI. Nothing wrong with that, folks. Very classic. Nothing fancy about this strategy. This property's in the Muskokas, by the way. Now, here's the first thing about this. Number 1 is a passive income strategy. So that 30 grand of net cash flow I made, I did not take that out of the portfolio. I didn't take it out of the property. I could use it to leverage it and do more real estate with it, but I didn't use it to live. I didn't use it to buy a Porsche. I didn't use it to go on vacation. That would be a bad use of money. That's number 1. Number 2 is the thing with buy and hold as a strategy. It's a very capital intensive strategy. Buy and hold is the strategy that requires probably the most capital, or very close to the most capital, in terms of all the real estate strategies. Keep that in mind, because as we talk about your time, money, knowledge matrix, some of you are starting with $5,000. Some of you are starting with 50. Some of you are starting with 500,000. Based on how much money you have in your time, money, knowledge matrix, some of you will be able to jump into buy and hold, and some of you won't. Some of you have to get creative around your buy and hold. But definitely a buy and hold, Patrick, is a cornerstone of all portfolios, because it's a passive income strategy. It provides cash flow tomorrow, and it's a critical part. And why don't you address renter, the fact that Canada is becoming a renter nation, Patrick? I think that would be very wise for us to address that with our great folks here.
Yeah, well, I think there's a couple things to look at it when we look at real estate is Canada is becoming a renter nation for a number of reasons, not the least of which is that in the biggest part of Canada, the most major centers of Canada, the house prices have taken out a lot of people in their ability to afford to purchase a home. And so that, first off, that drives a lot of the renter, because you can't buy, so you rent, right? That's the first part. Millennials historically some are interested in buying, but they're less interested. In our millennial report, we're seeing that millennials don't want to necessarily buy. They're happier to rent smaller places. They want to be in the heart of a downtown area, walkability, and that's not always the case, but it's often the case. And depending on, and that's you can't paint all millennials with one brush. It would be a mistake to do that. You have to look regionally at what those millennials are up to and what they're doing, but that's another reason to do that. Now, when you look at the case of COVID, you look at, well, then let's go back. Then the financeability, banks, in terms of what they're giving for mortgages, they added the stress test, which took a lot of people out of the price points, which really accommodated them, and then brought them down, and they went, no, I'm not interested in that. And their payments had to go up, down payments had to go up. So once again, that drove a lot of rentability. Then we had immigration into Canada, which was very high, 300,000 people a year right up until about a month ago. That changed really quickly. But the point is that all of those immigrants coming in were needing to rent, and they needed to rent for a number of reasons. They didn't have a down payment. They didn't necessarily have jobs. They didn't have a credit rating. So the rental demand in Canada was really going up. And you guys in Central Canada really experienced that more than anybody, as well as Vancouver, by the way. So those are just kind of an overview of why Renter Nation is becoming what Canada is known for.
Now this is very important. Patrick said a couple key things there. So remember, you have a tool belt on. And what we just gave you is we gave you a tool called the hammer. And that hammer, in this case, is called buy and hold as a strategy. And that hammer, you're going to use it all the time. It is the cornerstone of your tool belt, just like a real hammer is the cornerstone of any tool belt. But the point is this: back in the day, 10 years ago, 15 years ago, 20 years ago, plus, you could actually build a real estate portfolio with just a hammer. You could, but you can't anymore. Nowadays, after 3 properties, 4 properties, 5 properties, it gets very difficult to continue down building real estate with just buy and hold. And that's because of the stress test and a lot of other, critical components that we can get into another time. The point is you need more tools in your tool belt, not just a hammer.
And I want to just point out something, because we're talking about buy and hold. This is where the concept of investing in real estate goes sour for many. This is where a lot of nightmares are shared. And one of the reasons is misinformation. There's a huge myth. JG pointed it out. This is passive income in the future. The myth is that I can take whatever passive income I'm making today, cash flow I'm making today, and put it in my jeans and spend it. And the reality of it is that's where it comes back to bite you. Because when you're treating it like a business, you realize that there is maintenance, there is wear and tear, there is occasionally a tenant that will go off the rails, and you're going to have to go in and put $10,000 into your property to bring it back to rent ready again. If you're taking that $500 a month or $250 a month or $1,000 a month cash flow and you're putting it in your jeans, then at some point you realize that you got to take that money back out of your jeans and put it back into the business. So in the world of buy and hold, the intention is that cash flow stays in the pot. You build reserve fund, you build up, and maybe you're going to hit a number, but it's like, if for those of you who may live in a condo or a strata fee, you realize that there's a reserve fund study that's done to say, in 10 years from now, you're going to need X amount of dollars to replace a hot water heater, or perhaps some appliances. So once again, this is where you hear all of the stories and nightmares that go on is buy and hold, because people lived into an illusion that this is easy, they can work, and they're going to put $500 a month in their pocket, as an example.
Now this is very interesting about buy and hold, folks, because like I said, buy and hold is the pillar. It's the cornerstone of all portfolios. Now, if you're taking notes, and I hope you are, here's the formula that we at Rain live by. We call it the 3-8-17 formula. 3 properties will give you financial security. With 3 properties, you'll be financially secure. With 3 properties, when you want to retire, at a later date, when you pay down some of those mortgages, you will, with 3 properties, you'll have somewhere about $4,000 to $5,000 a month in positive cash flow, and that later you will be able to live on. Put that in your bank. You will have a $1 million portfolio, and you'll be making a solid $5,000 a month, roughly, passive, and that will go on forever. Incredible. It's a golden egg. It's financial security. Now, let's look at financial certainty. Financial certainty is the next level, and that's 8 properties. And at 8 properties, you're going to have a nest egg. That golden egg is going to be worth somewhere between $2.5 and $3 million. And it's going to spit out about $10,000 to $12,000 a month, $10,000 to $12,000 net per month forever. Amazing. That's financial certainty, 8 properties. Then you have the last part, which is 17 properties. That's financial freedom. And financial freedom is where you have roughly about an $8 million property, an $8 million nest egg. And that nest egg is spitting out $30,000 a month in net positive cash flow. That's after some time. And that's at 17 properties. Now, we've been doing this now for 28 years. That was the case back then. It is still the case today. And that's financial security, which you then grow into certainty, which you then grow into financial freedom. So that's what you're going after. How you do that is by using the cornerstone of real estate called buy and hold. But just like all of us, you want to accelerate this. You want to do it faster. So do I. Everybody does. So let me show you some other strategies to accelerate your plan. This strategy is called fix, flip, and refi. This is where you buy something that needs some love. You buy something that needs a value add. You need something that needs some renovations, and you're going to essentially fix it up, and then you're going to refinance it, put it into your portfolio. Let me give you an example. So this one here, this is an example. This is in Peterborough, actually, Derek. And this is a property we purchased here. We purchased this property for $257,000. $10,000 of closing and carrying costs to do this deal. I invested 30 grand into renovation. So here's what we did. We added a kitchen, we added a bathroom, we put in floors, new fixtures, like new lighting fixtures, and paint. That's it. In the back where my Cayenne is parked, we tore down an old kitchen there. We tore that down and we made double parking stalls. This is a downtown property. So by the time we're all said and done, this property, we had 297 grand into it. 257 to buy it, then 10 grand for closing and holding, and then 30 for the renovations. We reappraised that property 3 months later for 350 grand. So 80% loan to value. So the bank wrote us a check for 280. What that means is that I only have 17 grand left in this property. That's my only investment. How I got there was 297 minus 280 is 17 grand. Now, if I consider the net cash flow per year of $6,000 a year, $500 a month, just the return on investment, cash on cash, is 35% in this case. If I consider the appreciation, if I consider the mortgage pay down, my ROI is 474%. Awesome. Now, a couple things about this. Number one, nothing fancy about this property. I bought it on MLS. I didn't buy it. It wasn't like a super good deal. I'm not giving you like my best deals ever. This is just a normal everyday deal for us. Bought this on MLS. I bought it from an agent, did the renovations just like anybody else would do. Nothing fancy here. Just a great deal. That's the first thing. Second thing, notice right away, the first property, I had to invest $50,000 to do that deal. This property, I had to invest $17,000. So right away, if your mind goes where my mind goes, is it says, you mean, JG, I can do 3 of these for every one of those? The answer is yes. That's correct. A fix, flip, and refi, you always will leave a lot less money in these kinds of deals than you will in a buy and hold, okay? So now, do you do just this? Well, you could. You know, a lot of people call it the Burr method. You could just do fix, flip, and refi if you wanted. For me, it's another tool in your tool belt. So I gave you the hammer called buy and hold, and now I'm giving you the second tool. Let's call this the screwdriver, and this is fix, flip, and refi. This is how you add it in. Now, by the way, folks, I see a great question here. What kind of properties is this? This is a single family home. By the way, this is what the actual reason, one of the big reasons we did this deal is because this plot of land is actually zoned for a 4-story building. So, and the city of Peterborough, where it's expanding is, I'm gonna, probably in about 3 years, I'm gonna tear this down and I'm gonna build a 4-story building for individual flats. So this building is gonna be, now this building's long paid for because it generates $6,000 a year in net cash flow. That means in 3 years, this building in my mind is paid for. The only thing I got left into it is leverage. My money's all back into my pocket, which is perfect. So that's important with fix, flip, and refi. Patrick, anything to add on this one?
No, not really. I see somebody had asked whether or not you were doing the renovation yourself. So 80% LTV is loan to value. So that means in this case, JG put 20% down. In the case of JG, in the treating it like a business, because of what JG does, he did his own renovation. Now, JG didn't pick up a hammer, although he'll sometimes put a video out there and hold a hammer like he's doing something. That's not true. He'll throw a little drywall dust in his face. None of that's true. It's all for video purposes. He doesn't even know what end of a hammer to hold. Ultimately, he has a very skilled team that helps him do that. And none of what I just said is true. JG's quite adept at doing renovations, but treating it like a business, it's not the best use of his time, and that's not where he spends it. So he doesn't do the renovation himself, but that's all to say that he could. He doesn't. He actually has a general contractor that does it for him that's on his team.
In this particular deal, I did this deal with a partner, and that partner was very good at renovations. They did the bulk of the work in this particular deal. And by the way, folks, again, this is a good example. Fix, flip, and refi, and there's a lot of these deals out there, folks. They're like golden eggs, you know, golden Easter eggs. You just got to find them. They're out there. We're doing a deal right now. And at some point I gotta add the Riverside project, Patrick, to this, because people wouldn't believe that kind of deal. That project there, folks, it's actually, you know where it says total invested 17,000? If I showed you those numbers, it would be total invested and it would be a negative number. That's because money's coming back my way. Plus I got an asset generating revenue day in and day out, month in and month out. So the way I see that in my business is that's free money for me, because I had to do the work to get it there, which we've been working on for a year. But now that it's there, it's going to put cash in my pocket. Plus, it's going to generate cash every single month. Plus, I got a new building that's a $500,000 building added to my portfolio. It's really incredible. Fix, flip, and refi is a phenomenal tool. But remember, it's just a tool in your pocket, in your tool belt. Okay, it's another tool in your tool belt. Now, to pull off a deal like this, this is not a solo sport. The thing with real estate is a lot of people have this misnomer that real estate is a solo sport. To do a deal like that, you really need a great power team. You need a great realtor. You need a great broker. You need a great lawyer. You need a great accountant. You need good partners, or you need a good renovator. You need good contractor. You need good sub-trades. There's so much. You need good suppliers. There's so much to a deal like that. They're phenomenal, but it's a team sport. So don't go into it with the attitude of, I'm going to do this all myself. Absolutely not. You need to engage the power of a team in this case, and you guys get that given the community you're in. Those two strategies, folks, those two strategies are passive income, okay? That means that you're leaving a little cash in there or a lot of cash, depends on the strategy you pick, and it's going to generate great revenue for you later. Now, this one is fix, flip, and sell. This is an active income strategy. You're putting this money in your pocket, okay? You're buying a Porsche with this. you're going on vacation, you're taking the family away. If you're really smart, you're taking some of this active income and you're feeding your other strategies. You're feeding your fix, flip, and refi. You're taking some of this income, you're feeding it into a buy and hold strategy. But this is active income. This shows up on your T4 this year. Now, fix, flip, and sell is very simple. This is what it's simple. Simple, it's just not easy. It's what you see on the shows, folks. It's what's HGTV and Property Brothers this and all these shows. What I bought was on the left and what I sold was on the right. I bought this property for 260 grand. I renovated it. I put 20 grand into it. What did we do? We put in a kitchen island. We put in a dishwasher because there was no dishwasher. We put in a vanity in the bathroom because the vanity was old and decrepit. We replaced just the vanity. That's it. We replaced the shower doors. We added a bedroom. That was key. It used to be a 2-bedroom, 1-bathroom home. We made it a 3-bedroom, 1-bathroom. We refinished the stairs and we refinished the floors and we painted. All that for 20 grand. Holding and closing costs were $18,350. Now, why is that number so high? You should be asking yourself. And the answer is because we're using private money for this. We're using private funds. Anytime you're doing a flip, even a fix, flip, and refi, you're often using private funds. I'll get back to that in a second. So total into this property, we sold for 298, okay? 298,350. Sorry, that was our cost, 298. 298,350 was our cost. We sold for 345. So it's $46,000 profit, okay? Now, here, let me go back to private funds. When you're doing private funds, you're paying 8, 10, 12% on this money. Now, a lot of people, straight out of the gate, this comes back to that real estate investor success cycle. If I told the average person, I'm paying 10% interest on this all day long, and they say, wait a second, and they immediately go to their fear zone, they can't recognize the opportunity. So let me ask a different question. Would you pay 10% if you're going to make a $46,000 profit? Absolutely, all day long. But you have to look at it the right way. So these strategies, you're using a lot of private funds. You're using a lot of private lenders. There's lots of them out there. The funds are I wouldn't say not easy to get, but they're not difficult to get either. You just have to be in the game of doing it. And this is a great strategy to generate cash. Now, what this is Patrick, this is another tool for your tool belt. I just gave them, let's call it a star screwdriver or a Robertson, whatever you want. No, they already have a screwdriver. This is their tape measure. This is the tape measure, okay? So you use this tool sometime. Now, are you going to go out there when you build your portfolio? Are you going to do just like this? That's it. That's all you're going to do is fix and flip. You could, and some people do, but you don't have to do that. You could do 1 or 2 fix and flips a year in order to give yourself some extra income so you can feed your real estate portfolio your buy and hold strategy. Okay. So you could, it's an extra tool. Now this, I'm getting some questions here. So how much down payment on this flip? So this 20% down payment on this flip. Okay. 20% down payment on this flip. And in terms of, yes, you actually, by the way, someone's asking about negotiating real estate fees. I don't know if there's any realtors on this call, but let me tell you a great way to negotiate real estate fees. Patrick, I don't even think you and I've talked about this. One of the things we do when you start doing a lot of flips, okay? Here's a phenomenal trick. Oh, I've never even told Rain members this.
Okay, well, will you get to the trick, dude? Come on. Can't hold us in
suspense. It's really good. So you buy, so let's just say Patrick's my agent. The negotiated deal is this. I'm going to buy all my flips with you. I'm going to buy them all with you. And the ones I buy with you, I sell with you. I buy at full commission rate, but I sell at 1% commission. Okay. Now, because Patrick knows as my agent that I'm going to buy it. When you're doing fix and flip, you're doing 2, 4, 6, 8, 10 of these a year. I mean, this is a massive cash cow for Patrick as a realtor. So he knows I'm going to get all the deals. And oftentimes as a realtor, they're often able to double end fix and flippers. So they're highly profitable. But for me, if you're doing fix and flip a lot, you're negotiating those fees. You are not paying full retail realtor fees. The average realtor, there's probably some listening to this thinking, I would never agree to that. A lot of them agree to that. And you got to be in the business though, right? Now, Patrick, this is a good time for you to talk about the team though. This is a good time for you to talk about the team, the power team that you need, because not every realtor would agree to this, and that's totally fine, but you're not looking for every kind of realtor.
It is so important to understand that when you're building your team, it's always about relationship. So as much as, some realtors would push back against it, it's because they are maybe a little, I'm going to say naive, because ultimately in the world of being a realtor, you're looking for clients, and your cost of acquisition of a client and lead generation gets dramatically reduced when I have a JG, because I'm the realtor, and guess all I have to do? I know he's a client. I know he takes in action. I know that as long as I bring him a deal, he's going to take the deal, because now I understand what deal he's looking for. So now for me to get a paycheck, all I have to do is find the deal that he's looking for. I'm happy. That keeps it pretty simple. I'm not chasing around people looking for this and indecisive. JG says, here's the parameters. Here's what I want. Bring me those deals. I'll buy them. I know he's an action taker. And as a matter of fact, in order for him to succeed at his business, it's really imperative that I bring him the deals that he wants so that he can get those deals done. So that's one part of creating the relationship, in this case with a realtor. But with a mortgage broker, the same thing. When you're working with a mortgage broker, you really want an investor-focused mortgage broker, an investor-focused realtor. Ideally, you want individuals who are investing in real estate because they relate and that they understand where you're coming from. So you're not educating somebody on a deal and what does joint venture mean, or what is a fix and flip, and what does refinancing mean. Because as a real estate investor, when you walk into a bank and talk to a banker, you're often, if you've got any experience, you're often more knowledgeable about mortgages than the bank is that you're talking to about mortgages. So relationships and building your team is an essential part of creating the success, creating your community and the culture, and building an environment to succeed. So that's going to be the lawyer. You want a lawyer who can turn deals quickly. I know you're trying to say something, JG. I just want to get over the team thing. Okay. So the lawyer, the accountant, the realtor, the mortgage broker, quite likely a property manager, you're building a team so that you can leverage their knowledge, their experience in building your business of investing in real estate.
Yeah. No, it's so true, Patrick. And I see Kayla on the chat is saying, I would do this. She is a realtor and said, I would do this deal all day long. And that's great. Very smart of you. Couple of things, folks, to keep in mind. Patrick mentioned mortgage broker. Talking about private funds, every mortgage broker, every good mortgage broker has a little back network that nobody knows about. And they have private funds. They have lots of private lenders in their back pocket all day long. You don't have to go far to find private funds. It's the first thing. Second thing is, these deals back to realtors. I'm buying a lot of these properties. I buy a lot of properties sight unseen. That one there, for example, the realtor that took me through that on a FaceTime, and I asked a couple key questions of the things I want to know. And when you get comfortable in this game, going through inspections and all that stuff, that goes away real quick. But anyways, let's not go there. The point is that these are very fast deals for realtors. Realtor finds his deal, calls me up. I say, yep, let's buy it. Done. Deal's done. We're not fooling around. So now another big mistake, let me keep going here. Another big mistake is creative accounting and budgeting. Now in real estate, just like in the stock market, you are your worst enemy. And that's the emotion. That's the emotion that comes. And it's the same in the stock market. I 100% get it. And everybody intellectually gets it right up until, they say, oh no, I won't do that. Eh? I won't do that. Patrick, I'm smarter than that. Everyone tells himself this story, but you will end up being your own creative accountant at some point, and you will end up fudging the numbers, and you will end up so you have to be very careful of this. Now, at RAIN, and you'll see in the Real Estate Investing in Canada course that we're going to talk about at the end, we have ways of making sure you don't do this, but please be careful of this because creative accounting is a real tough one. Let's keep going to the last strategy is called assignments. Now, I just want to pause for a second because so this is another active strategy, another active income strategy. You're putting this money in your pocket. Assignments is another tool in your tool belt. It is, you know, that tool that you don't use that often, like needle, let's say needle nose pliers. I don't know why I'm on this tool belt analogy, but you know, needle nose pliers. Derek, you know what I'm talking about, needle nose pliers. You don't use them that often, but when you need them, there's no other tools that does the trick like a needle nose plier. You have to have them, right? Or side cutters. You know, you don't need them. So an assignment is like that. And the reason I've given you these 4 folks in terms of the different strategies, buy and hold is the most capital intensive strategy there is, just about. Assignments is the least capital intensive strategy. You need very little money to do an assignment. Let me walk you through what this looks like. So here's the property we purchased. This property we nicknamed Chestnut. And Chestnut was a beautiful property. Look at that top left window. That's called natural ventilation, Derek. It's got no windows. This thing was in absolute shambles. And we purchased this property for $130,000. Now we assigned it for $160,000, and I'll show you in a second how we did that. $5,000 of closing and holding costs. So we did a $25,000 profit on this deal. All of that happened in 3 weeks, and we never touched the property. Okay, amazing. Assignments are often super high, super high ROI. They require very little cash. Here's how this works. So I'm going to use a scenario here where I'm going to purchase this. I'm buying a property from Patrick, and Patrick wants to sell me his property called Chestnut. Perfect. Patrick and I negotiate, and I buy the property for 130 grand. Now, when you buy a property, folks, and if all of you have bought some property probably at some time, you have to submit an offer. And when you submit an offer, you send along with your offer a deposit. So in this case, we put down a $3,000 deposit to Patrick to buy this property in this example. $3,000, off it goes. Patrick accepts. Perfect. My $3,000 check gets cashed. When I close on this property, say in 30 days as an example, in 30 days, I'm going to owe $127,000 on this property. Now, in the meantime, so that's all done deal. Now, in the meantime, Derek comes along, and Derek Sweet owns this company called Sweet Construction. I just made that up. And Sweet Construction, they specialize in doing fix and flip. I'm making this up, Derek. And what happens is Derek finds out that, and Derek and I, let's say we know each other, or Derek finds out that now I own this property, or I'm going to close on it. He comes to me and he says, JG, I do fix and flip for a living. I own a construction company. I would love to buy that property from you. I want to do a fix and flip on it. How much do you want for it? And I said, well, Derek, I don't know, like, let's say 180. And Derek says, I can't do 180. We'll do 150. I say, Derek, I can't do 150. Well, listen, I'll tell you what, we'll do 160. Derek says, done. So now Derek wants to buy it for 160, and I have a contract for 130. So there's a $30,000 delta there, okay? Derek pays me 30 grand as an assignment fee. I take that money, I put it in my pocket, and now I've essentially sold Derek the contract to close on that property for 130 grand, or 127 grand, I should say, in 30 days or whenever the closing date has been established. That's how an assignment works. So the important thing about an assignment is I am never closing on the actual property. Derek's closing on it, and Derek's paying me for the right to close on that property. So Derek writes me a check for 30 grand. I say, thank you very much. And then Derek closes on that property and it's done, right? That's an assignment. So the important part here is that I took $3,000. That's the only cash I ever outlaid. That's it. These deals take a lot of work. You know, in terms of time and in terms of knowledge, these are really high in terms of time and knowledge, but they're very low in terms of money. I only needed 3 grand for this deal. I turned 3 grand into 25 grand in 3 weeks using this deal as an example. So that's an assignment, folks. And no, there's no interest cost in this case because I took my 3 grand. I only put down my deposit. That's it. So there's no interest cost in this case. Now, when you're doing an assignment, folks, I want you to write a couple things down. Number one, you need 3 exit strategies out of an assignment. When I bought this, my original plan was to do a fix and flip on it. I was going to fix it. I was going to flip it. Okay. That was plan number 1. Plan number 2 is I could assign it, which is what we ended up doing. Plan number 3 is if I couldn't assign it and I had to close on it, I would do a full fix and flip. If I did a fix and flip and I couldn't actually sell it, I would rent it and I would put it into my portfolio. I would make it a fix, flip, and refi. So I had 3 exit strategies, and the numbers, the calculations, worked on all 3 of them. The guy who actually bought this, sorry, go ahead, Patrick.
No, go ahead. The guy who actually bought it, go ahead.
The guy who actually bought this property for 160 grand, did a big flip on it, totally gutted the place, invested what did he invest? He invested $200,000 into it, I think, or 100, yeah, but I think it was 200,000. So he was into it for say 360 and he sold it for 450. So he made $90,000 roughly. So he did great. I did great. Everybody did great. That's an assignment. Patrick?
Yeah, the assignment's often known as a wholesale, and there's lots of wholesalers out there. You'll hear them, people go, I'm a wholesaler. And so this is what they do. And then secondly, on the question that's asked about how does the back end work? And so when that offer is written, the language will be different per province, but it's somewhere the buyer is Jean-Guy or his numbered company or assignee. So that's really the permission to say, I'm going to buy it, but I have the right to sell it to Patrick or Derek or somebody else. They don't have to name anybody, although sometimes they will. It's or assignee, and that leaves open the door for you to take the property and pass it off.
Yeah, exactly. And by the way, when the seller agrees to, in this case, I bought this from Patrick. The seller agrees to that offer originally. There's nothing to be done. There's just it's a new person closing on it, and that's it. So great questions, guys. So the bottom line with this, and here comes another big mistake made by people, is just waiting. You know, we showed you 4 strategies here in the last little bit, and we probably, as per normal, Patrick, went way longer than usual. But you know, there are 4 strategies here. Do not wait. I don't care what time, money, knowledge matrix you have. Waiting is a bad idea when it comes to real estate. You know, the best time to buy real estate was 30 years ago. If you didn't do it then, the next best time is right now. So don't wait. Waiting costs millions of dollars. And by the way, folks, this is only 4 of the various strategies you're going to learn in real estate investing in Canada. There's land development, there's rent to own, there's pre-construction, joint ventures, second mortgages, LPs, REITs, multifamily value add. There's all kinds of different ways to make money in real estate. That's just 4, and they're the 4 of the biggest, sort of most used strategies. So there's so much, okay? And I know I just said don't wait, but then earlier I said wait, don't buy now because of COVID. So we'll be in touch with you and tell you exactly when it is you should be buying.
Don't wait to learn about investing in real estate, but wait to invest in real estate. How's that?
Now, so this is the magic formula to decide which tool to use in your tool belt. So by the time you finish real estate investing in Canada, you're going to have this tool belt full of tools. You're going to have so many tools in there, you won't even know what to do with them all. And the question is, what do I use when? First, you got to look at your goals. Do you want active income? Do you want passive income? The second question, you're going to learn this in real estate investing in Canada. You're also going to learn it next in research, is what market are you investing in? If you're investing in Peterborough, like Derek's a good example, you know, Bob Cajun, you shouldn't use the same strategies in Bob Cajun as you do in Toronto or in Oshawa or in Whitby or in Peterborough or in Orillia or in Grand Prairie or in Fort St. John. You know, different markets require different strategies. Also, where the market cycle is requires a different strategy sometimes. And then final question you ask yourself is, what are your resources? How much time, how much money, how much knowledge do you have? And then pick the right strategy accordingly. And all this will be explained more in real estate investing in Canada. So that's that. Now, Patrick, let's jump into research. Hopefully that was good, folks. I hope you appreciated that detail on the strategy. Thank you very much. Well, that's great. Let's talk research, Patrick, because this is really what REIN is known for.
Yeah, when we look at real estate, you know, we look at the economic fundamentals that drive a real estate market. As I said earlier, we don't want to look too much at the history. That's kind of like trying to drive your car forward while looking in the rearview mirror. So ultimately what we're trying to do is look into the future of real estate, and we base that on the economic fundamentals. Now, interestingly enough, Rain came up with what we call our long-term real estate success formula. And this is what drives real estate time and time again. And we look at gross domestic product. You hear that number talked a lot. GDP growth, gosh, it's in the news every day these days, given what's going on. But when you have a, really, what is gross domestic product? It's my definition of it, to keep it simple in these kinds of presentations, is it's a snapshot of the economic health of a region. That's the easiest way to look at GDP growth. And when you have great GDP growth, it means that the economy is doing well. That means that there's employment growth. People are working. And when you have a region where people are working, you have population growth because people are moving into the region because that's where they're going to go, because they want to work. And as they move into that region, whether it be interprovincial migration or immigration, what ultimately happens is you get an increase in rental demand. And landed immigrants, by the way, historically rent for 2 years, sometimes 3. And they do that because they come in, they don't know if the job they got is going to last. They don't know what city they want to live in. They traditionally are going to land in Toronto, Montreal, Vancouver. Those are kind of the 3 major centers that they come into. And then they go out from there. They don't know what neighborhood they want to look for. They're looking for culturally, generally, they want to look in what neighborhood, what culture aligns, where their culture, whether it be Czechoslovakian or Italian or Chinese or whatever it might be, where are they going to go? And then they need a credit rating. They need to understand the banking system, and they need history. So that's all to say is that immigration generally drives 2 to 3 years of rental demand. So for real estate investors in Canada, with the immigration coming into Canada, that's why you see so much rental demand and shortage, because what happens as gross domestic product goes, you get increased rental demand, which means decreased vacancies, which translates to increased rents. Why? Supply and demand. Now, usually when you see GDP growth 12 months later, when you see a pop in GDP growth 12 months later, you see employment growth. And then 18 to 24 months later, you start to see an increase in property demand because people are moving from rental, they're looking for properties. So then supply and demand, you get an increased price in property. Now, a lot of this is going to be very skewed over the next year and probably the next couple of years. And that one of the reasons is, so I'm qualifying this still applies, but we have to look at GDP growth because we got all of that helicopter money coming in from the feds. And guess what our GDP growth is going to be driven by? Federal money coming into central banks, being lent out. It's going to drive. So we have to be very careful of the decisions we're making based on GDP growth. Okay, so then what we do see happen, and we're going through it right now, it's a perfect example of it, is our next slide, which is this is very true, but the absolute opposite of that happens as well. And when you start to see GDP growth collapse, like we're seeing happen, what happens? Unemployment increases. There's a population a population decline. Why? Because people are moving out of a province, moving out of city. They're going home. They're going back to the cities where they were born, and so you start to see a population decline in the most the most economically challenged provinces. Now, we haven't seen that yet because it doesn't matter where you go right now, you're in the same boat, doesn't matter what city you're in. But you won't see so much population demand, but you're going to see decreased rental demand. You're going to see increased vacancies for sure because immigration is going to come down, and then you're going to see decrease in rents. Now, this right now, you don't see it, and we're not seeing it. We don't know what's going to happen. This is an anomaly in this cycle, so we'll see what happens, but this is generally what's going to happen. Then you'll see an oversupply of property, and property prices will come down. I'm anticipating property prices to come down, especially in some provinces, and Alberta being an easy one to pick on because of oil and gas, but you're going to see another decline in prices. Might be short-lived, but there will be a decline for sure. So that's based on the economic fundamentals. And although these are 8 or 10 data points, our research team looks at, I think it's 73 different data points. And so within each of these, you double click on those and you double click again, and it's like a number of data points. And we actually have software designed to that we're feeding the numbers into, and they actually give us the results.
Now the key thing, folks, to remember about real estate is, and you guys are very familiar with the stock market. Real estate market and the stock market do not operate the same. The real estate market is very regionalized. What I mean by that is, like, that's why this formula is so critical. If you're in, I'm in Peterborough. That's one of my areas of expertise. It's also where I live. It's where I got businesses. If you're in Peterborough, what happens in Peterborough doesn't necessarily affect what happens in Oshawa, and vice versa. If the GM plant in Oshawa closes, if it doesn't affect the GDP of Peterborough and doesn't affect the employment of Peterborough, it will not have a material effect on Peterborough's real estate market. So those bottom three right there, GDP, employment, and population, that's what drives the market up or down. So that's what you have to look for. You guys are from all over the country. You're from all the various different cities. You have to look at, now there are various market influencers. COVID-19 is a market influencer. It's influencing things, but the basics are the basics and the fundamentals are the fundamentals, and this is what they are. GDP, employment, population. If you want to find out, does my city, call it, let's just say some of you live in Bowmanville. Well, let's just say you live in Bowmanville. Go look at the GDP, employment, and population growth of Bowmanville. Go look at the last 5 years. Where's the trend going? Look at the constant data. Is the trend going up? Is it going down? Just based on that, that will drive the rest of the marketplace. Okay, folks? So that's really, really key. And this formula here, this is called the long-term real estate success formula. This was created by Rain, 28 years in the making. Okay. Now, this leads to another big mistake made by people, which is short-term thinking. No, the real estate market is not nearly as volatile as the stock market. That's because of it doesn't have nearly as much liquidity in the market. You can't go in and get out of the market as fast as you can on the stock market. What that means is that you have a lot less liquidity, you have way longer cycles, and as a result, you have to think longer term. You can't think short term in real estate. Based on the strategy you pick, the tactic you pick, you have to have long-term thinking, so not short-term thinking. And number two is every real estate investor typically starts out as a homeowner, and they bring with them their homeowner mentality. And a homeowner mentality is not the same as a real estate investor mentality. So be very careful of the thoughts you're thinking about, between your 2 ears, because you got to think like a real estate investor. How do you do that? Like a business owner. We showed you the pyramid. That's how you think about real estate, not like a homeowner. Okay, so keep that in mind. Now, a lot of people still get stuck, Patrick, whether we teach them all the strategies in the world, we teach them all the research in the world, they still get stuck on real estate. And oftentimes these are the 8 great waits, Patrick, the 8 reasons why people wait, meaning they don't proceed into action. And they also wait as in they're very heavy. So Patrick, no money, no time, no opportunity, wrong economy, wrong partner, family issues, lack of knowledge, teach me, more and more and more. I imagine you went through this too.
I did go through this, and you actually, we're talking to a bunch of coaches, so you see this in your clients, right? Where they make these excuses and they get stuck. And, we use the term weights here because, one of my favorite phrases is, it's not the weight that we carry that breaks us down, it's the way we carry the weight. And ultimately, these are weights that get carried and excuses, and people don't even realize what it is. This many years into it and literally thousands of real estate investors, what we've come to realize is that every one of these has been an excuse for somebody at some point, but they bust through it. And so ultimately we get stuck in the excuses and we don't realize what they are is we're bumping up against the fear, and we have all sorts of reasons for the fear. And right now it's about COVID and the uncertainty and all the rest of it. So ultimately, when we look at fear, JG says it well, and forget everything and run, or we face everything and rise, but it's a decision that we have to make. Our job as coaches, like your job as coaches, is to help people to face their challenges and rise above their challenges. And real estate is a vehicle to have success. And JG, you want to carry on with your number 8?
I think absolutely. This is the final sort of mistake. It's probably the biggest one that holds the most people back, which is what we call the terror barrier. You know, we started out with this slide of the real estate investor success cycle. And one of the challenges as you get as you move out of comfort zone into fear zone, and you want to get into learning zone, you want to get into the growth zone, every single zone you got to battle through, you have to battle through what we call the terror barrier. You have to overcome that terror barrier. You have to bust through that. You have to feel the fear and do it anyway. You guys know this. You coach to this. You live this. That's why you're here. So we don't have to spend much time explaining this, but it's the same with real estate. And you have to be self-aware enough to know that. Because you're going to be one day, I promise you, every single one of you is going to get at some point, get stuck into analysis by paralysis. We do to this day. I'll overanalyze deals because in that moment, I'm in the fear zone. And the trick is to recognize you're in the fear zone. You got to get the hell out of there. Push through forward. Go get someone else's opinion. Call Patrick Francoeur. Get yourself a mastermind together. Bust through those terror barriers because this is what's going to hold you back. It's not the real estate stuff that holds you back. It's you that holds you back. So, Patrick, anything else on the terror barrier?
Nope. I think you've nailed it.
So knowledge is not power. Knowledge is only potential power. Action is power. So here's the plan. Number one, you got to get educated. Real estate is a dangerous sport. The mistakes are costly. They're painful, and you have to get educated. You just have to. Number two, once you get educated, you got to immediately move into action. Immediately move into action and implement proven success formulas. Now, this is interesting. One of the mistakes people often make in real estate is they try to do real estate off of watching YouTube or something like that. You have to move into action. You can't do real estate from the couch, right, Patrick?
You can, and I really arrived at the analogy that I think just hits that point home the most. I can learn to swim on YouTube. I can learn the concept of swimming on YouTube. I don't learn how to swim until I get in the water. And until I'm in the water, I'm not learning how to swim. Doesn't matter how much time I spend on YouTube. And the problem is that many people get sucked down the path of I'm learning. It's on YouTube. No, you're not. You're gathering information. You don't learn until you get into action. And it's such an important step to take.
Absolutely. So get educated, take action, and then you'll achieve some financial security. You'll grow that into financial certainty, and you'll continue to grow that into financial freedom. So in the Real Estate Investing in Canada online course that we have, this is really the pillar. This is actually a snapshot. What we went through, and it's been almost 90 minutes, is really a snapshot of what we teach, except this is way bigger. This is 125 lessons. This is 78 hours of content and exercises. And it truly is the step-by-step process that we teach for real estate success. So let me just sort of walk you through and show you some of the 15 modules. Now, RAIN has been the source and the #1 source and resource for real estate investors in Canada for 28 years. We've written all the books on the topic, all the best-selling books. They're still the best-selling books to this day. The challenge with books is the minute they're printed, they become out of date, especially in real estate. Information changes so fast these days that it's out of date the minute it's printed. So we decided to take all the books, all the knowledge, everything we've done and put it into an online system, something we can update, something we can not only teach you the information, but give you the system. And not only can we give you the system, we can actually update the system on a regular basis. So here are the 5 parts to the system. #1 is your champion's journey. We talked about 3, 8, and 17. How do you get from 0 to 3, or from 1 to 3, or from 2 to 8? Wherever you're at in your journey, you have to design your champion's journey to go from wherever you are to 3 properties, 8 properties, and one day 17 properties. You want to plan your financial freedom. Financial freedom doesn't happen by accident. It's planned, it's specific, it's strategic. Then we teach you all about the research fundamentals, okay? All about it. We teach you all the how-to strategies. Today, we taught you 4 it took us about 40 minutes to go through 4, so about 10 minutes each. In the course, there's 78 hours of content and exercise. We go way into more depth on the how-to strategies. And then we teach you how to manage your real estate investment like a business. And that's really, really key because that's truly what's going to make you successful. Our approach is a result-driven approach. We're taught by experts. The experts that teaching the course have done over $100 million of real estate. We're talking about it's video training, which I'll show you in a second, and it's a system. That's actually my favorite part about this is a system. It's not just videos and teaching and learning. You get that too, but it's a system for success. You're actually going to get all the worksheets, the documentation, the handouts, the PDFs. I'll show you that in a second. And last but certainly not least is it also includes confidence testing. Now, testing is actually a critical part of learning. In real estate, your success will be directly attributed to your level of confidence. The more confident you are, the more successful you're going to be. So what we do is in all the major sections, we have 15 modules. In all the major modules, we actually give you a test. And the test isn't for you to see if you pass or fail. No one's watching that. It's for you to see if you pass or fail. It's to build up your confidence. So we love having these confidence tests. So here's a behind the scenes look at this. The teachers of this program is Don R. Campbell himself, Jennifer Hunt, who's our Vice President of Research, and Patrick Francie, who's been here with you today. Those are your three teachers. And in these modules, you're going to be able to see that there's a video component for every module. Every module has a video component, and every module has a downloads component. It's got a PDF. So you're going to have, by the end of this course, you're going to literally have all the tools I have. You're going to have all the tools Patrick has. You're going to have all the tools Jennifer and Don R. Campbell have. You're going to have all the same worksheets. You're going to have the same analysis sheets. You're going to have the same the same gap analysis, the financial preparedness tools. You're going to have everything. Everything we have, you're going to have. We're not like holding anything back. It's everything. It's literally like going to university for real estate. It's incredible. So here are the 15 modules, everything from discovering your beliefs and your champion's journey. That's all about establishing, do you want 3? Do you want 8? Do you want 17 properties, and why? And then your time, money, knowledge. We actually show you how to evaluate your matrix. We talk to you about the business of real estate and how to set up your business. Like, do you incorporate? Do you not incorporate? Who should you ask? All the details. We talk about the power of leverage. We show you how to organize your financial house so that you can work with the bank and get approved. We show you all the market research. We show you how to pick a location. We show you, should you invest in Peterborough? Should you invest in Orillia? Should you invest in Alberta? Where should you invest and why? We show you, we give you the research. Probably one of the best things I love about this program is we show you how to fish. We teach you how to fish so you can feed yourself forever. We show you the market research, and we actually show you, we didn't get a chance to show you here today, but we actually, every market goes through a boom, a bust, and a slump. And so there's a cycle to every single market. We show you how to evaluate that cycle. Then we show you all the tactics that we talked about today, the tools in your tool belt, if you will. Show you how to find properties, show you how to evaluate cash flow zone, how to analyze properties, how to write and negotiate offers, how to work with agents, like the tricks we showed you today, how to do your due diligence on a property, how to work with the bank, and how to manage for maximum cash flow. We'll get to the questions in just a second, folks. So for example, I got about 2 slides left. What's interesting about this course, and I absolutely love it, is if you're brand new to real estate, if you're thinking, okay, I want to start at the beginning. JG, Patrick, teach me. I'm a sponge. I want to know everything. Start from the top. Then I would recommend you start a module 1 and you work your way down. It's going to be 125 total lessons. It's going to be 78 hours of content and exercises, and you will come out the other end a sophisticated real estate investor. Now, some of you watching this are thinking, I love this, JG, but I don't, I've been doing real estate for 5 or 10 years. I have 2 or 3 or 4 properties, and I love most of this, but I don't want to have to start from the top. I want to jump right to how to find properties. Perfect. You can do that. We've built this program in such a way that we call it a non-sequential learning program. You don't have to do it in order for it to make sense. Every module stands alone. So you can go from finding properties to analyzing properties. Then you could jump back up to your time, money, knowledge matrix. And then finally, you might end with working with the bank because you're trying to get a deal financed right now. So that's really important. And I'll end on this, folks. Education is so valuable in real estate. And the reason for that is because every real estate deal is worth so much money to you. So I just want you to consider that. What if by learning the market research and learning the real estate cycle, it helps you invest in a property that generates $50,000, $60,000, $100,000 plus for you? Was it worth your hour, 2 hours to learn? Absolutely. right? What if in the writing and negotiating offers, we show you one trick how to negotiate a better price and we save you $8, $10, $30,000 on your next purchase? Was it worth it? Absolutely. What if in analyzing properties, we show you how to properly analyze properties so that we give you the confidence to say no to a deal that you otherwise would have got emotionally involved with? And that's a $250,000 mistake that you don't make, right? This is all possible, folks, and this is what happens in real estate. So that's the course in a nutshell. Real estate investing in Canada, 125 lessons, 78 hours of content, and step by step for your real estate success. It truly is your next step on getting educated. It's your way to maximize your ROI and minimize your risk. And anytime in real estate you do that, maximize ROI and minimize your risk, you're really on the path to growing your active and passive income. So Patrick, anything else you want to say about the course before I move on? And then, yeah, one second. Go ahead, Derek or Patrick.
I just want to remind our members that they're all going to get this course for free once they go into Platinum Pro, and the details are in last month's recording, or actually this month's recording from April 1st. So you're all going to get this course for free.
Smoking deal. Good for you guys.
Yeah, this is awesome. By the way, I was blown away with this. I didn't know what to expect. I didn't think it was going to be boring, but I didn't think it was going to be this much entertainment and wisdom. I mean, I'm blown away. Absolutely.
Oh, thanks, Derek.
Thanks, Derek. Appreciate that. Patrick, anything to add about the real estate investing in Canada course?
No, I think you've covered it all. And, you know, if there was some questions, if we want to take some time for some questions, I think we've covered it all. We covered it pretty in depth here, and, you know, we can go on for a long time because this is what we do. But for you as listeners, probably time if you want to engage and ask some questions. We're here for you, and we'll answer all of the questions that we can possibly answer if that's what you'd like to do, Derek. I don't know how you would like to move forward.
Yeah, Monica has a question. She's a real estate investor. I think she's a member of RAIN. About COVID and, you know, the concern about new legislation coming out about renters not having to pay. Just, you know, your thoughts on that. I mean, what's that going to do to the real estate market? I mean, a lot of people, they have mortgages to pay and, you know, there's no money.
We got thoughts on that, Derek.
Yeah.
So there's no.
Why don't you start with that?
Yeah, so let's just start with that one, Monica. It's a great question. So Monica, if you are a RAIN member, because I think Derek said you were, we did do a property management masterclass on COVID-19, and we went for 3 hours on that particular topic. Just so you know, it's in your member back office. The short answer though, Derek, is there is no legislation that they don't have to pay. They have to pay. There is a way to deal with this. You have to create. Oh, you're not a part of RAIN. Okay, well. You should be, but let me give you the answer. They definitely, everyone still has to pay their rent. There's legislation, what they've done is in Ontario, the landlord tenant board is not doing eviction hearings right now. So you can't kick anyone out legally of your apartment. I will tell you this though, if you handle the situation right, and if you put in proper rent deferral agreements, we are seeing an outstanding success across our community. 95% of renters have paid their rent to our RAIN members. Okay, so very, very high, very, very low deferral rate right now, and very, very low cancellation rate. And then there's the question of mortgage deferral. Do you defer your mortgage? You know, if someone doesn't pay you, you do right now have the ability to defer your mortgage in most cases for anywhere from 2 to 6 months, which is a special kind of COVID thing that's happening right now. So people still have to pay their rent, Derek. That's the bottom line. They do have to pay their rent. If they don't pay their rent, you cannot theoretically evict them. And you have to handle the situation carefully, and you should follow a system. If Monica, if you join, go to Facebook and join My RAIN Space, which is a Facebook group we run. And in there, we included a letter, the kind of letter you should be sending to your tenants. But really right now, it's a question of compassion. If you treat the situation with compassion and care, and you reach out to your tenants, you're going to be shocked that most of them are going to pay. You know, across my 62 apartments, I only had four that didn't pay. And of those, all 4 of them, we put in a rent deferral agreement in place with them. All four said they would pay, all four that didn't pay paid a portion. They couldn't pay it all, but they paid a portion, and they were supposed to finish paying by the third week of April. Two of the four have met their agreement already. They prepaid early, which is great. So I only have, out of 62, I only have two that didn't pay. I was just talking to an investor now 2 hours before this. I was talking to Dominic Patrick, and he's got I don't know, 300-400 apartments probably, and he said that his deferral rate's at about 10% right now, which is so 90% of his tenants are paying, and he has a lower rent profile than I do. So point is, that's right now not a concern, but as COVID continues, you have to handle the situation delicately because people may have a harder time next month. We're watching it closely.
Something to consider as well, and these are, when we talk about, one of the things we learn as real estate investors is you can't paint all of Canada with one brush. One of our little buttons that gets pushed for us often is, the average house price in Canada. It drives us crazy because that's like saying, what's the average temperature in Canada? It's like such a ridiculous number, yet the masses buy into it. Anyways, having said that, Ontario has a certain regulations around their rent and how they deal with this situation. Alberta is slightly different, and BC is slightly different again, and each province has their own way of handling things. A couple things to consider in this situation as real estate investors is a couple things. Number one, even if that individual is unemployed, and they will be getting an EI check and will offset. Now, the cost for everybody has dropped dramatically. So even if you've lost your job,
cost of living
has dropped dramatically. You're not going to movies, your kids aren't in any sports, you're not going to restaurants, you're not having to buy clothes, you're not having to put gas in your car. As a matter of fact, if you got insurance on a couple of vehicles, you may as well pause insurance for a couple of months because you're not using your vehicle as much. So the actual cost of living has come down for everybody. You're not getting your hair cut, and I know that's a big savings for you, Derek. So at the end of the day,
my wife has been cutting my hair. Marsha's been cutting my hair.
Yeah, I'm thinking about doing my own. So the point is that's those are things to consider. We adapt to what's going on economically. We adapt to what's happening in the investment climate. That is treating your real estate investing like a business.
But it's no. Go ahead, Derek.
This has been really good.
Thank you, man. Appreciate that. Any other questions, folks? Happy to stay on.
There is a question. Do you see a rise in vacancies in the Toronto area? If so, would that be considered a renter's market where rental prices will decrease? And we don't see a decrease in the rental market.
No.
We see an increase.
Yeah, if anything, it's going to be very, it's going to continue to be tight. Keep in mind, folks, if you saw some of our research in Ontario, because I think the bulk of people here are in Ontario, we were about, now don't quote me on the exact number, Jennifer would have my head if I got this number wrong, but we were about 25,000 rental units in Ontario underwater, meaning the demand was so strong for rentals, we were 25,000 rentals short. Okay. So even with COVID, even with what's happening, even with immigration coming down, we're still going to be short on rentals. That's how far behind we are in terms of demand. So we have a long runway. That's why the renter nation component of the talk is really important. You have a long runway of being a good real estate housing provider.
A question about the U.S., just quickly about the U.S. I think right now there is no answer to that. And when you talk about the U.S., you got all those states, you got different regions, you got different cities. There's no such thing as investing in the U.S. a good idea. You got to get really specific. Are you talking Texas? Are you talking, California? What state are you talking about? And then what city are you talking about? Because that makes all the difference.
Yeah, I will say two things to that. Number one, great question. Again, Monica, great question. First thing is that the formula we taught you applies in the US as much as it applies in Canada. So follow the formula, number one. Number two, we have fellow REIN members and REIN partners that are the second largest landlords in Phoenix, Arizona, and Dallas. So, they think it's a good idea to invest in the US. But you got to follow the formula. Bottom line, follow the formula. Oh, Roy, do you think the potential drop in real estate prices may occur within 12 to 18 months? Then it happens. I realize very good. Yeah, it is difficult to. So the question is it going to take 12 to 18 months for real estate values to come down, Patrick? What are your thoughts on that?
I think once again, it's regionally. In Alberta, no. I think you're going to see numbers come off in Alberta much faster. The degree to which they come off, it really is going to depend on when things get back. Like I say, we've got a lot of federal and which will ultimately be provincial stimulus that's happening. So that will give you an artificial, I don't want to say artificial. I mean, it's going to be a real bounce back. But it's, is it going to be sustainable? Don't know. You got in Alberta, like in Edmonton, for example, I've heard numbers as high as 45% of small businesses will be shut down and will not come back, by the way. It's very, very dramatic. For those of you, for a couple people on this call who know me, I've had retail businesses for 35 years. The doors are closed. Will I open them again? I really have no idea. I'm sitting here going, I don't know. I don't even know if the industry will come back. So that's all to say that, there's going to be a lot of helicopter money, as they're referring to it. There's real concern about liquidity in the central banking system, liquidity with municipalities. How are they going to pay tax, or what are your taxes going to pay? Was there going to be a spike in taxes? All of those things will affect real estate. So long-winded answer to say we don't know for sure. Right now, it's still a little bit early.
I do think that a little bit more color on that, Roy, is, real estate's a supply and demand game. And right now, both supply and demand are frozen. Now, we don't know when it thaws, what's going to happen. If they both thaw at the same time and the supply and demand picks up where it left off, and it won't pick up where it left off, but that's really what's going to gauge how fast and how low it goes. We do expect a decline. We're already seeing it. Appraisals are already coming back lower. So despite what a lot of people are saying out there, it's not going to go down, it will go down. We're already seeing it's already happening. So that's really the answer, Roy. Hopefully that gives you some color.
Roy,
I love Rhonda's question. Oh, go ahead.
Yeah, and just to give one, when we look at real estate, you're talking about you're talking about residential, multifamily residential. All of those things will be different, impacted differently. Commercial, for example, you have to consider this: is that in commercial real estate, you're going to have a spike in vacancies because you've got all these small business owners, they're shut down. Will they go back? We don't know. And then secondly, and more extensive to even that, is there are absolutely businesses that just realized, holy cow, I can work virtually and it works. My staff are happier at home. I get more production out of them. And guess what? I'm going to keep it this way. And so the demand for commercial real estate will probably get soft, and I think it's going to be pretty permanent. Box stores, maybe, we'll see, but, there's going to be commercial space available. That's all I got to say. Lots of businesses are realizing. We've been working virtually now, I guess, JG, for almost 3 years. So for us, it's pretty normal. But there's other businesses that do that, but it's not the norm, but I think you're going to see it come to be the norm, including government, by the way.
Yeah. Great point. I put, someone asked about the Facebook group. I put the link in there, folks, for you. So that's great. Rhonda, I love your question, Rhonda, because that's something people aren't talking too much about. Very astute question. Any thoughts on city dwellers wanting to move to smaller communities to cut costs and simplify their lives, thus driving up rural segments of the market? So here's my opinion. This isn't necessarily a Rain opinion. This is JG's opinion, or Juan Guillermo's opinion. Number one, I think that what COVID-19, one of the effects COVID-19 is going to have fundamentally on people's living habits is millennials and people were okay having these shoeboxes of condos, 300, 400, 500 square feet, but now they've been forced to stay inside for this long, and it's going to start having an effect. So I think small apartments, at Rain, we've always said, stop investing in small apartments, stop investing in micro units, stop investing in 1 bedrooms, invest in 2-bedroom or 3-bedroom apartments. That's better than 1 bedroom or less. That trend is going to exacerbate. That's going to be even more. And I do think, Rhonda, that we will see a continued movement towards these rural segments, because people are going to say, listen, why am I living downtown Toronto in this concrete block if I'm going to get, and by the way, this COVID stuff, in case I don't know where you guys are at with it, but just so you know, this isn't the first lockdown. There's going to be many of these lockdowns. This is the first wave. We're going to have a second wave. We're going to have a third wave of this stuff. So after 2 or 3 times of people being locked in their condos for a week, 2 weeks, 4 weeks, 6 weeks, let me tell you, it's going to have a fundamental impact on their views of how they live. And that's your answer there from my perspective, Rhonda.
Okay, I'm going to expand on it a little bit if you guys are interested in the conversation, and we'll expand on it a little bit, is that when we look at real estate, we have to understand a couple of economic fundamentals. Yes, people will go to the smaller centers, but they have to be able to work. And then ultimately those centers don't have the infrastructure, they don't support working unless you can work remotely. Then the problem then becomes is will working remotely, where does the tax base come from? So it does get a little bit intricate and a little bit complicated in that. I think what you're going to see a lot of, I've already, believe it or not, you know, I'm already have had conversations with people that are kind of my age, and they're going, you know, we're on our way to retirement anyways, we're shutting it down. So you're going to see individuals at that 60 plus age that are going, I'm done. Like, this is way too hard, way too complicated. Didn't want to retire, but I'm not going to take this on. And I tell you what, that's going to be really harmful, because ultimately that wisdom, we risk losing a lot of it, but we also risk losing some fundamental economic impact, because they're not going to be spending the money they were before. And that's really it. So it's very complex, isn't it? You know, there's all these nuances that are going to happen that we have to look at and we have to consider.
And it's going to take, you know, it's going to take years, folks, to play out, just so you know. I mean, real estate's a slow moving animal. It's going to take years to play out. But this is what we're telling you is this will present opportunities of a lifetime. We don't know where, we don't know when, we don't know how they look yet. We know that they're dressed in coveralls and they look like a lot of work. We know that much, and we don't know when, but this will take a long time to play out.
It will. And that, ladies and gentlemen, is Real Estate Investing in Canada. And thank you very much.
Guys, thank you so much. Really appreciate it. This was so worth watching. And I know I'm going to have to watch it a couple of times. So much information. And we're going to get together again, I'm sure, do this periodically. I really appreciate it. Great presentation today. Wonderful.
Thanks for having us. Thanks for having us, Derek. And thanks, everyone, for coming. Really appreciate it. Nice to see you, Roy. Miss you, big guy.
Yeah. Be well, everybody.
Good night, guys.
Cheers, guys. Bye-bye.
Bye.